All right, guys. So you should be able to see my screen. We're going to be talking about markets and what we're going to be looking at going into this week. So if you guys have chart requests or things you want me to look at, comments, anything like that, you can put them in the chat. Let me know if you have questions or just charts, anything in general. Okay. So first things first is let's take a look at just kind of the overall market. So first thing is we're gapping down again today in the overnight session. And we're going to take, I don't think there's too many setups to trade, but I do think that there are a lot of things to take note of going forward that will help us make better trading decisions. So like, meaning like, were there things popping up into Friday? Not really. Into the close on Friday? Not really. But are there, um, will there be this week? Probably. So we have to be prepared for that. So, first thing is when we're looking at the charts here, you can see ES SPY. Main thing when you're looking at this, we lost the 200 EMA. We failed to rally above it, and then we sold off, and then we had a daily sell signal here, and then you can see where we've ended up so far, and we're way past 2.5 ATR. So I think the main thing we have to pay attention to that I'd want to bring to your attention is looking at the weekly 200 right here. So why is that important? Well, because when we look at these different pieces here and we take note of if I get my drawing tool. Okay, so notice how we held it here when we dropped from the COVID crisis, we fell below it and reclaimed it really quickly. And then the bear market in 22 was met with support here, and then here we just came shy of it. So you can see this is a really, really critical area of support. And I've shown you 1, 2, 3, 4 different spots where we have bounced above it and or bounced and held it. Now let's look at an example. Here's another example of us holding it. Now here's an example of where we were unable to hold it. So going back into here, you can see the last time that we actually broke and held below it and then got a sell signal. We continued to be in a downtrend since from '08 until '09. So, well, that looks like a lot longer, doesn't it? February of '08 to March of '09. So a year long of just steady decline. So that's the thing that we need to pay attention to is this weekly 200. If it does break, you can see when it formed here and we were below it, we continue to sell off here as well. And this was the 2000 meltdown. And so this weekly 200 is going to be a really critical level going into this week, or really the going forward in the bigger picture. So that's the main thing we want to pay attention to here. So that's ES. It's all going to be pretty similar. You can see here we kind of undercut it on the NASDAQ. But the main one here is ES. If it holds that 200, same thing. Very sim You can see here it's a lot further down for SPY. So, and you can see that was a critical spot of support as well. So, with that in mind, um, what we may want to look at, as you can see here, if we go all the way back in time, you can see when we broke it here, the 200 SMA, we broke here and we continued to downtrend. Once we broke it again, we entered into a new bull market. Then when we broke to the downside, we had a strong sell-off here. When we broke it, we retested it and then traded higher and continued to trade higher. This was a fake out. We got bought right back up above it. Um, and then here we came down and tested it. So I think with them being in two different spots, the answer would kind of be so ES, if you want to short, go short the S&P 500. So whether that's SPY options, SPX, from the longer term perspective, when we get below that 200, which we are now on ES, that's a suitable spot, with an idea that we may head to the 200 here on SPY. So that's just like a longer term target. But if we go to the more immediate term stuff, so we can see we had a sell signal trigger on the futures, we had it on SPY, we sold off, and now we're continuing to gap down, and we're down 4% going into the session tomorrow. We'll have to see where we end up going from there. But so what can we do from this standpoint? Like what kind of uh, considerations can we make? Well, first thing is that from here, I don't want to get short, but I also do not want to get long. So that's the standpoint. So like um if you were in the mentorship, you remember this conversation of we have these breaks from we have these moves down and then we have a reversion to the mean. We have a move down, reversion to the mean. And then we have a move down and then we have a reversion to the mean. Now, all this is just a more dramatic version of that, right? So, shorts would have been paid a lot better than uh like for example, this move down right here. So, what is the most natural thing to look for? A reversion back to the mean. Do I want to get short down here? No, I don't think that's wise. I think it's probably uh it's a pretty you're shorting in the hole is what they say. So you don't want to be shorting down at the lows, way outside 2.5 ATR, because if you look, we haven't had very many sell-offs like this, so it could continue, but you're just playing with fire and it's kind of gambling. So it's like even the sell-off here wasn't as dramatic as what we're seeing right now. So it's like you might as well just sit on your hands, be patient, and wait for some consolidation. So you can see the difference here, right? So like even in this sell-off, it was pretty swift. And then what happened was we started to trade sideways a little bit. You see a lot of closes within the previous day's range. We start to trade sideways, right? And then we get that pop up to the 21. And then from here, you're looking for a move away from the mean. We started to get that, but we built a higher low. Okay. So this is what bottoming action looks like, right? Right now, we're in phase like one. Okay, so like we had this initial move down, and then we had the retracement, and then we had the second flush, which we're in right now. We need to see some consolidation, and then when we see that consolidation, we can start to look for a potential move back to 21 EMA on the daily time frame. But until we get that consolidation, it's still kind of full steam ahead, headed to the downside. Okay. And then once we start to see buyers step in, we start to trade sideways a little bit and it starts to slow down. Then we can look for the reversion to the 21 EMA, and then we can look for the push back away. Initially, even though in this example it didn't work out, I'm going to be looking for short positions when we get to the 21 EMA because naturally it's just a ebb and flow of a move away from the 21, back to the 21, move away, back to the 21. And so here, now what we're looking at is um, this created a higher low. This is what bottoming action looks like. You see a spot where we put in a low, we revert to the mean, and then we put in a higher low, and then we break the 21. And then from there, we come up, we put in a high. But the most important part is when we break here, we retest and hold. And that's what the confirmation is of the trend change, right? You can be early in here and then catch that move to the 21, but then next move you're looking for is a continuation of trend until we get signs of a reversal, break of the 21, and then we come and retest it, and then we continue higher. So far, when we go back to what we're looking at, you can see here we had this flush down, move back to the 21, came back down, and then to the 21 again. And then now we're just continuing our flush, right? So the next natural move is a consolidation of some sort like this and a reversion back to the mean. So that's what I'm looking for initially. And so that's what I'm kind of thinking going into this week. We can best way to put it, dabble in potentially looking long. I'm not saying I'm bullish, but I'm saying based on how the pattern almost always goes is you see this move, right? You get this move away from the 21. So this is another example of bottoming action. We break below 21, we retest it, flush, come back and revert to the mean, then try to continue, but then we create a higher low. Now look what happens. We break above it, we come back, we retest it, and then we continue the trend. Okay, we break below it, we retest it, and then we flush. Okay, then here we break through it, and then this is just some kind of messy action. So that's not as clear. But a lot of times you see that higher low, it breaks, we retest, and then it's continuation of trend. Until we get that, we can't be really bullish. At this point, we're entering into stage four, right? So if you were in the mentorship, we're starting to enter into stage four on ES. So the last time we entered into stage four was right here. And then we entered back into stage one and then stage two. So right now we're full on bearish. And the patterns within this, when you're a shorter term trader, it's either like if you are more involved with the market, you're going to be looking for something, a reversion to the mean. So you'd be buying relative strength names that are holding up well, and you'd look for SPY to revert back to the 21 EMA once you see some bottoming action. And then from there, you're going to look to regroup, get in short positions until we have that reversal signal that I've been telling you about. Okay. Because right now we're entering into stage four. We're getting the 50 below the 200, and the 50 or the 200 is not necessarily sloping down, but you can see it's starting to curl down. Very similar to this action right here. So I would expect a pop here sometime soon. So, but you don't need to drop or try to catch a falling knife, right? Okay, so that's SPY. Now let's go look at some other things. The VIX, we have not seen it this high. And this by far is the most mean reverting asset that there really is, right? We have these moves where we have these really outsized moves and these crazy moves, and then we revert back to the mean very aggressively. Like you see these huge spikes, and we have this aggressive moves back. Okay. That all that is now, if we look, where does a lot of the times that happen? Well, if we drop down, probably say right around where we're at, right? So tomorrow I would imagine we're going to open up probably near 50 based on how the action is going right now. I wouldn't be surprised if we saw 50 going into the open tomorrow. So with that in mind, see this green line, that's where we currently are. Notice when we got there this time, that time, that time. This time was COVID. So we had a much huger or much larger spike, not huger. That's not a word. And that was comparable to this spike back here in '08. Okay. So that's so really what can we be looking for? Well, we got up to essentially 85 on this one here. And then we got to most of these other times we get to around 45.50. So first line in the sand, which was this one right here. So if we get to that, then we'll look for, okay, if we get to 50, you got to be really cautious with initiating, especially initiating short positions, looking to go short. But if you want to start looking there, okay, what's going to happen from there? But then, absolutely pretty much all bets off the table on short positions when you get up to 85. You're pretty much that's a losing game there, in my opinion. So we did, if anybody caught this, I did miss it. We had weekly buy signals printing. Actually, last week we had a weekly buy signal printing at the close of $21.50. Now we're at 45. Um, but just keep in mind, everything is mean reverting. Right now, we're at a spot where mean reversion is probably likely. And you don't, but with that being said, you don't want to just try to catch a falling knife. Okay. You want to look to see some sort of bottoming action. And it almost always comes with some sort of consolidation, some sort of consolidation. This one didn't have too much of consolidation. Consolidation, consolidation, consolidation. It's at least like 3 or 4 days of trading sideways. And you can see it in these past patterns, right? NASDAQ, I'm not going to spend a lot of time covering that because all of these are pretty much the same. Um, Russell, this one just is not any good. This is just bad. Um, we're coming into demand here, but if anything, this is the worst looking one out of all of them, just because we were barely able to make new highs on this most recent rally, which tells you relative weakness when SPY and QQQ were trending higher the whole time and making highs over and over and over again. Okay. So that's that. That's IWM. Massive double top. So I would imagine I wouldn't be surprised to come visit this level here at around 160. If we do get there, that's when you want to be cautious because that's when everybody's going to be looking for that double top type price action to get into this double top, which at that point would be more so sell half, move your stock, break even, and then see if we do get that double top action where we have a much more extreme sell off, right? So right now, so to keep it plain and simple, VIX is at some very cautious levels. Same with all of these indexes here. So initially, I'm waiting for some bottoming action to then go to play relative strength names to go long because I'm not going to be shorting down here. Now, let's say if we have a pretty quick bounce and there's no opportunity to get long, I'm going to uh, look to get short. Like you can see here, red trend bars, you short at the 21 and it plays out nicely. So, um, that's what I'll be looking for now, especially with the stage 4 action, right? Any daily sell signals, you're going to want to be selling. And I think you're going to want to do that on any of these here. So now let's talk about some of these key names. Let me know if you guys have questions in the chat as we're going through. But um, yeah, so that's the indexes, the bigger picture, right? That's the bigger picture. The main level you want to be paying attention to. Just keep an eye on that 200 on the daily for SPY and ES. Okay, now let's continue through. So Apple, daily time frame, same type of action, right? This is a pretty extreme sell-off. Haven't seen this kind of sell-off in this name in a while, especially with this extreme of
Dying to watch that.
so
I feel watching
same
it.
thing. I'm not going to short it here.
Oh, really?
Got earnings coming up kind of in a month. Nvidia. So let's talk about this one a little bit. So there's a stat, and this is not just a made up stat, but this is an actual stat, right? So 50, it's called the 50/80 rule. Okay. So stick with me when I say this. So this is involved with past market leaders. So the prior leaders in the most recent bull market, what happens is 50% of the time they will correct 80%. Okay. And then 80% of the time they will correct 50%. So they flip, right? It's kind of funny it works that way, but this is a stat that, okay, the prior leaders in the most recent bull market, which they're pretty much always new, it's not usually a same leading market, uh, market leader. 50% of the time, they'll correct 80%. 80% of the time, they will correct 50%. And then it may take a really, really long time for that to recover, right? Like nobody really heard of NVIDIA before it made its huge rally.
Annoying. Just say
An
like what is
example
that
is
for
of
now?
this is Cisco.
I
Okay. So Cisco,
think you can probably look it
this
up.
had a massive move up.
Like
Okay. And this was a
files
market leader, right? Here's the
oh,
correction
man.
happens
Oh,
very often and it corrects. So this one we'll have to see things right in the way. So this ended up correcting 90%, right? And it still has not managed to make it back to its old highs, right? It's taken, and that was back in 2000. It's 25 years later, we still have not been able to recover what we lost here. Okay, so that's the danger of trying to buy falling knives and buy stocks that are falling that were previous leaders. That's the danger of that because you might get caught in some of this because with that stat, 50% of them are going to correct
okay.
80%. 80% of them are going to correct 50%. And then who knows how long it's going to take for them to get back to the levels that they were. That's why it's
Like
best to
having a
wait
hangy rope.
best
You
when
like having a
stocks are
hangy rope.
turning around
Do
and
dingoes like
buy with
that?
relative strength leaders, right? Because everybody wants to buy them on sale, but then when they buy them in sale, they don't go off sale, right? They just get cheaper. Here's another example. There's Qualcomm has this huge move up, right? And then it corrects. Now, granted, I believe it's definitely made new highs since then, but look how long it took to do it. So this was 2000, right? It corrected from 100 to $11, so 90% correction. And then now it took, let's see, in 2020, it made new all-time highs. 2020. So it took 20 years for this to just get back to where it was before. Okay. So rather, when you look at NVIDIA, this one was able to make huge returns within just a couple of years. So you want to pay attention to those leaders. Now, why am I saying that? Well, this one's moving into stage 4. It is in stage 4. So you can see here we have this cross above the 200. We're trading above it. We had some really nice weekly squeezes off of this. And then we started to get this sketchy action. We're trading above and below the 50, trading sideways, getting those trend bars. But look at this was the telltale sign. We put in this high, or then we made a little bit of a higher high. Then we did a lower high, lower high, lower high, lower high. Okay. And so now you want to completely look to short rallies on this. Now, here's the key. Remember that stat, the 80/50 stat? Now, if we go look at this, so far, we have corrected 39%. We've got 10 more percent to go. So say if we bounce here, so there's an 80% chance this is going to correct 50%. So that would bring us to this level here, which would be $76. Okay. So what we want to be looking for here is any bounce, short it into that level. And then you've got about a 50% chance of catching this thing correcting to $30, right? I know it sounds crazy, but that's the stat. Oh, there's someone. Looks like everybody's muted. Sorry about that. So that's what you're looking for here, right? So with that stat in mind, you can be looking for the $74 level that we just talked about. So basically this low right here. And then from there, you're looking at this area right here. Okay. So, or wait, it was $30. Sorry. So even lower than that. So right there, I'd probably even leave it right there. Those are probably the two primary targets. So I know that sounds like a stretch, but if we're going based off of that statistic, that's what we're looking for. Yeah, it's a pretty crazy stat. And it's funny how it works. It's the 80-50 rule and it can be flipped. So like 50% of prior market leaders will correct 80%. 80% of, or yeah, 80% flipped. I said it like 5 times. So I don't need to keep saying it. Okay, so now if we go through here, another one that had sell signals going into today, and all of this is shorting the rally, right? And I had been telling you about Microsoft for a while about this one was the most bearish alongside SMH. Now, why is that? If you just look at this, this is classic stage three action, right? You're seeing this ton of trading sideways and above and below the 200, above and below. And then look at we crossed 200, crossed 50. We got red trend bars. And then any rally has been shorted at the 21 EMA. So keep those red trend bars. We can continue to short it and we're good to go. So yeah, this is one that I think could have some pretty serious downside. I wouldn't be surprised to see us back at the 200. That's what happened last time here. Look at last time the 21 got below the 50 right here. We headed to the 200. So, and we're not that far. So, about 30 points. And we have not crossed below very many times to the downside. So this is a one to watch out for continuation to the short side. I think really shorting any of these is going to be pretty high probability, but the ones that I'm trying to give you the more high probability are like this is SMH as well. So this one is clearly moving into stage three. So or stage four, sorry. You can see here the 200 is starting to slope down. The 50 is below the 200. You can see here we tried to bounce or we bounced that 200, bounced to the 200, held it, held it, held it. Then when we finally broke it, retested the 21, this thing had a huge sell-off. So just once again, your classic stage two action, or sorry, stage three action in stage four. Okay. Um, Amazon, this one here doesn't look as bad, so I wouldn't lean to short this one first. But I do think that there's potential here to continue to look short on really any of these. Uh, I would venture to say the worst ones, because I don't really need to go through all of them. The worst ones here are um, Tesla, Nvidia, and Microsoft. So if we go look at like Meta, none of its moving averages have crossed besides the 21 and the 50. It just broke its 200 recently. Now, if we go look at Nvidia, or wait, Tesla, you can see here we had this massive correction back in here. This one gave back everything that of the move that it made earlier. So it gave all of it back, and now just now breaking the 200, it's working on moving into stage three, right? Or stage four. And so here we broke the 200, we've retested it, rejected it. Now we're getting a daily sell signal. So as long as we hold below that 200, I think this is a short And yeah, we don't have much support under here at all. So yeah, keeping all those things in mind. Those are, yeah, Tesla does look good for a short. So that's one of the main ones I think going into this week. But like I said, you just have to be cautious because uh the indexes are very oversold, and the most high probability move from here is a move back to the 21 EMA, or at least some sort of bounce, right? So we have to be cautious and notice Tesla is getting a sell signal while ever and is trading still relatively close to its 21 EMA. Look at all the rest of these. They're all really far off their 21 EMAs, which what does that tell you? Well, Tesla's holding up pretty well compared to everything else. So, um, w wait, wait for the bounce, see what the bounce looks like in the indexes, and then see which one of these look the worst. Okay. And then we can go and make our decisions. But it looks like actually Microsoft, I would say, and Nvidia will be those two leaders that look like stage four action is the worst. So look at we're actually about to be moving into stage four on Apple as well. And then, okay, so now some other things that we need to look at. So Bitcoin. So this one is moving into stage four as well. Okay. So now when we're looking at this, couple key levels here. So first one is the weekly 50. So if you look here, you can see we broke the weekly fit or see how it acts support here. It acts support here. Then we broke it here and then we traded downside for a while. And then we broke it here, held above it, and then traded higher and then held it here. And then now we are trading at it. I think that if we break this, we could see something pretty similar to this. So I don't know if it's going to be this steep of a decline, but I do think like we could trade. This would open up the door for much lower, probably 60,000 ish. So I do like the idea of Bitcoin heading much lower. And simply, we're having the 50 cross below the 200, which in this case would actually be a pretty good sign here for a continuation to the downside. We were getting some sell signals, and then you can see here um, April 6th. So yesterday, or well, I guess that would be today, right? We had a 6% down day. So we want to continue to watch this one because we are just now crossing into that stage two or stage four territory, right? And um, I think that any pops or sell signals, we should short this at least into this new high, if not down into like 70K and then 60K and then kind of 50K, like and just follow it based on that. So keep an eye on all of those things there. Okay. So Bitcoin, I think this one. So if we're looking for short signals based on these key names, right? NVIDIA, Microsoft, SMH, and Bitcoin are kind of those leaders for downside. Gold, I would not try to short gold, even though it had a nice reversion to the mean. It is strong here. So it has continued to trade higher and yeah, silver getting completely destroyed the past few days, along with the market and pretty much everything else. So this one, but you can see here, this thing's just a choppy mess. So you kind of just want to stay away from that one. Okay. And then if you guys have charts you want me to look at, let me know. I only have a few for the watch list here. That's why I spent so much time on those others, on the analysis on everything else. But so some shorts that look interesting. Match.com. So just fair warning, right? Um, Friday, there was like one or two stocks that had A plus buy setups that I could see on multiple different scans. There was nothing really setting up to the long side. Okay. So even though I'm saying, okay, I'm looking for like I would much rather see a bounce in the market, we're not seeing that, right? What's going to be the clue that kind of clues us in that there might be a bounce coming? Well, we see that sideways consolidation, and then we see buy signals showing up on a multitude of different stocks. And when that list grows, then you can start to see, okay, now I'm starting to see some buy signals in multiple different names. Okay, maybe there's an opportunity here to go long. Um, and then you pick one of those relative strength names or a couple and you play that reversion to the mean. Okay. But for now, there's only short signals showing up. So let's put them on the radar, right? So here we have earnings May 6th, so a little over a month. This one here, continuing to make lower highs, lower lows. So this one, I think we're going to test the lows on Match.com. I think you can see here, huge sell-off from, so this is a prior market leader, and we went from 181, now we're at one or $28. This is a prime example, okay? So that was back in 2021. So now when we're looking at this, where's our next support level? Not until 2024-ish dollars. So I think this one has a lot of room to the downside if we can break support and create a new low. We create a new low, just look for $24 to be triggered to the downside. Okay. Um, DLTR. So this one you can see here, we're right at a major support level. We're starting to print sell signals. Um, I think this one, give it a little bit of time. It does have a daily squeeze. So I think the best idea here is, and you can see that clean rejection right off the 200. Um, if you can get a daily sell signal here, I think this one would be a pretty good short candidate. Look for a sell signal so you can see the gap down that shows that there's bears heavily involved at this 200. So if we get a sell signal, look for a continuation of the downside, and that's only going to complement that 200. So we break there. I mean, you're you're looking at, or you get a sell signal right around where we're trading. You can look for 60 and then 55, kind of those psychological levels, right? Um, and then HUM, I think this one looks great as well. It's a little bit of support right near the lows. So that's what I would be targeting. Um, this one, it's a healthcare stock, but you can see here that this just has a really great trend of lower highs and lower lows. And we kind of got this double top thing going on. We're getting sell signals like a bear flag type deal. We're getting a daily sell signal. So, and then also you've got, where's that line? We've got this trend line here where we're continuing to bounce. We break that natural point of where we'd head to is 212-ish, 213. Okay. And then CNK, this one just now moving into stage 4. And so with this one, what I'm looking for is um, we're continuing to hold below the 200. We've got a daily sell signal. This is consumer services. So I'm thinking that we're probably going to get a sell off in this one. This one's just kind of not really going anywhere. We just hit a ton of supply, and I think that we can probably trade lower and kind of give back these gains here and probably head back to $20. So this one looks pretty good for a short. And we have earnings next month. MLM, this one I don't like as much, but it does look like it's starting to reverse. It could be at a spot to bounce, so I wouldn't put too much weight on this one. And then the only ones that I see showing up for longs as of now is consumer staples, and those being I like tap. So this one, it's a lot of beverage companies that are showing up that are still holding up. Tap, this one's still holding above its 21. Little more choppy than I'd like, so I may stray away from this one and just focus on the short side until better long positions come up. But this one, I think as long as we hold up here, it looks pretty good. We did get a pop off these buy signals, but I do think that like we've got weekly buy signals. I think this could be a move back up into this supply area right here some point soon. And other ones that are showing up like KO, this one already had its move, but now it had a quick reversion to the mean. You can see we had those buy signals, had to move up, reversion to the mean. Um, and so there's not much long showing up. And then another spot, if you are going to want to look to go long, is what we discussed gold. And I think probably the best gold stock to be paying attention to are those ones making new all-time highs, which AGI is one of them. So I'd be looking at this one, see if it can build another squeeze, see if gold can start to hold up, and maybe we can get a rally into earnings. So that's all the ones that I'm watching. Those are all the things that I'm paying attention to. And other than that, there's not too many long setups to be looking at. Um, I was looking at certain like we were in Yum. This one, it did end up making a nice move. We were at 2-1 risk to reward, took off half, and then I got stopped out at break even on the rest on the sell off that day. Uh I was an Aflac. I got long here around 107-ish and then rode it up into here. Didn't trim anything, got stopped out at break even on that one. And then there was and then the last one I was in was BJ's. So this one off a 4 hour signal, I got in here and then caught the move up, and it was about 5-1. I had a quarter position left, and I took the rest off on Friday. Um, I just it was giving me sell signals. You can see the 4 hour was starting to lose momentum and all that good stuff. So, but this one is still trading near all-time highs, so we want to keep an eye on this one as well. It does look pretty good, but it looks like we're probably going to get a mean reversion here. But with all that being said, I say that because as I'm trying to pyramid into long positions, um, I'm getting trims and then I'm getting stopped out at break even, or so tomorrow I'm going in completely cash and I don't have any positions on. And so right now there's no like if a lot of you guys have the scanners, when you look at those there's nothing popping up. There's no long positions popping up, which is an easy indication to tell us to stay out of the market or look to go short. So, do you guys have any questions? Do you have any charts you want me to take a look at? Um, Questions, comments, concerns, anything like that? Because that's all I've got for this week. Um, Main takeaway: look for the bounce. Um, don't try to jump in front of it. If you're a shorter term trader, wait for that sideways action for a few days. Then we start to look for longs. Once they begin to appear, we catch that move, that reversion to the mean in the indexes. And then from there, we look to go back short. Okay. So we're just playing the reversion to the mean and bounces or reversion to the mean and moves away from the mean. So for example, like here. So um, you're probably going to short Bitcoin. Looks the best and clean. Yeah, I would agree. I think Bitcoin has the most potential as of right now. Kind of moves on its own. So we can look to short things like MSTR or things like that. I think, yeah, Bitcoin is probably the one of the better looking ones to go short. I think really the main signal is if we can get below this weekly 50, I think that will be a really good spot to look to go or to catch it to the short side. because you can see it was a major support here before this rally. So if we can get like daily buy signals below that 50, that's a really good looking short signal. But right now you can try and get in early in hopes that it will break it and have a continuation. Okay. Any other questions? Are we good to go? All right. Well, thank you guys. I appreciate your time. Let me know if you have questions in the chat, DM me, message me in the trade floor, and I'll get back to you. But that's the main things I'm looking into this week. Just be be patient. Uh, you don't need to rush into things.
Mommy, it's not
Most of the
home.
time, most of the time, it's best to stay cash during this type of market. And then just when it starts to rebound and look good, just start adding longs and then you pyramid and progressive exposure like we talked about in the mentorship. But all right, guys, hope this helps. And I'll see you guys for the markets this week.